Yo, what is up? It is Cowboy, and we are live. Algo Factory is live. It's alive. All right. So if you watched the recorded video yesterday, did a little bit of conversation around what the hell did I talk about yesterday? What did I talk about? Oh, Caspa. We dug into Caspa. It's hot. And for something like that, I did want to spend a little more time on that. But that was the opening soundbite was the Frankenstein. It's alive, and it actually is. Man, when it comes to like early movie history, that actually has a lot of implication for today if you want to get super, super deep. But we're not getting super, super deep into that. We're getting super deep into the charts. So go ahead and say hello in the comments if you're watching this live. If you have charts you want to see, ask for them. That's what this is all about. This is all about taking a look at the market and seeing if we can help you with looking at charts, right? We don't give any investment advice here. This is all to do with just kind of learning how the markets work. And until I get any kind of request, I'm going to jump straight into the economic data. I was going to jump into the charts, and we will, but we just had the prelim GDP come out, and the number is pushing the dollar down, which is probably pushing other things up. In fact, I got a nice trade going on the euro right now that I just entered not 10 minutes ago. Very small trade, a little bit risky, but I had a feeling that it was a good idea to take that trade. So let me add the screen here. Let's go ahead and share the screen. We are sharing the screen. Yeah. Okay, so here we go. All right, so we're looking at Forex Factory, and I like Forex Factory. Let me zoom in a bit so you all can see what's going on the screen here. We had here this red folder, prelim GDP quarter over quarter. Okay, so the actual came out at 3.2%, forecast at 3.3. So it was just below, the actual was below forecast. And there's a couple of things that go on with these announcements. Firstly, if the announcement is kind of just near or at the forecast, that means that there's no big surprises and money will enter the market and probably go into the direction that it was going to head anyway, right? So this is like money waiting on the sidelines in case there is a big surprise. And this is going to happen mostly in the currency markets. However, it affects all the markets. It affects anything, especially traded against the dollar, since this is the USD prelim GDP quarter over quarter. This is a quarterly number for the gross domestic product. So you're looking at a number that doesn't happen very often. It happens a few times a year. And when that happens, a lot of money is going to enter and exit the market, depending on what that says. So got a couple people in chat. Mevbet March, thanks for coming in. That being said, you had a lower than expected, it's very slightly lower than expected, right? So what this is doing, because that is a US dollar metric, right, that's going to affect the perceived strength of the dollar. So let me zoom just out a little bit so we can look on here. And let's see here, USD. Click on this folder. It says the actual greater than forecast is good for currency. Therefore, actual less than forecast is bad for currency, right? If you want to use their good, bad language, it means dollar weak. Well, that means anything traded against the dollar is going to be strong. And look at Bitcoin right now. Of course, Bitcoin has been just absolutely mobbing upwards, right? I think it broke 60,000 this morning. Let me take a quick look at it. Oh, yeah, we're above 60,000. This really took less time than I thought. I thought we wouldn't see Bitcoin break out for a few days, but it's just on fire right now. I don't know. I'm assuming this is supply shock. I'm assuming that this is FOMO. Definitely FOMO. So we could just see it keep going. It's hard, you never know what's going to happen with this thing. Usually before the halving, there is a pullback on Bitcoin. But I will say this, with Bitcoin, there have only been 3 halvings. So there's not a whole lot of data where you can look back and say, well, there's been 109 halvings. And so the chances are like, there's only been 3. So you're choosing from a sample size of 3. And when you have that small of a sample size, it's actually not it's not so far out of the realm of possibility to say, oh, this time might be different, right? Because this is usually the last the famous last words of traders is, oh, well, this time might be different. Not when you have a small sample size. it's not, there's not a whole lot of like established of what is not different, right? Like, well, this is how it usually goes. Well, we don't really know how it usually goes when there's only 3 halvings. If there were 103 halvings, oh, well, yeah, it usually acts like this, right? So we can use the 3 data points. We could go back in time and say, well, we do have 3 data points and there should be a pullback before the halving, but with only 3 data points and with the institutional money coming in, we really don't know what's going to happen. And so, I was thinking there might be a pullback, but with my spot bags, I did not bet on that pullback. I did not sell any spot at all ever. I don't think I've sold spot in a long time. I did take a hedge. I hedged short, and that didn't work out. So I, definitely didn't try to do that again. And so price is above 60. I expect price to continue up to 63, and how it acts around 63 is going to have a lot to do with with what goes on. The mid, like 63 to 65,000 is going to be interesting. In fact, let's jump up to the weekly chart, and we got Miko. Thanks for coming in. Appreciate it. Okay. Let me tell my private group. Come over to YouTube and ask for charts if you want to see some before the private show. Okay, tell my private group they can come over to YouTube and ask for charts. Now, here's the thing. After this show is over, we're going to roll over to the private channel. And the private channel is where people can ask, like questions and stuff like that. And we do that for an hour. So the gorilla, who I don't know where he is right now, the gorilla's been kind of recovering from an illness. So he might be just kind of catching some rest right now. I did tell him to make sure he's well rather than come on. I think he might be resting. But the gorilla is he's usually on with us, and even in this live show, he's on here at least half the time. And then, of course, during the private live lab, the two of us are on there, and we answer questions for like a whole another hour. So I'm definitely live daily for an hour and a half if you include that. If you include the private show, gorilla's usually on with the private show, often on this show. So this is how much we're working. We're on here every day answering questions, looking for, if people want to see other stuff, right? So we got some people talking in the private room. Just so you know, if you're, let me tell my guys something. I gotta tell everybody what's going on. Okay, got that handled. Yeah, that's where it is. Bitcoin itself is definitely moving, and it's pushing everything else. You got a lot of meme coins being pushed up. But look, if you're excited about your coin that you like that's pumping right now, you can go ahead and thank Bitcoin for that, right? If Bitcoin wasn't pumping, there's a really good chance that your meme coins and everything else that's pumping would not be pumping right now. So most everything right now is being driven by Bitcoin. Let's take a look at some old history here. And we're going to go to the weekly chart, and we're going to go back in time. And we're going to look at where the next, pretty much the next structure. I mean, there's a little bit of kind of structure here in the low 60s, but the all-time high is sitting at 69,000. And quite frankly, at this point, with the way price is going, it would not surprise me to see this all-time high being broken in the next couple of weeks. It could happen. It's happening quicker than I thought it would happen. And, if you look at the regular, like the way these impulses are going, look, when FOMO catches, you can't stop anything. So you have moves that are about this big. Our impulses are about that big. You could even extend them to that high. Here's another impulse right here. This is a massive impulse to the upside. This one impulse from 38,000 up. That is a massive impulse. That's bigger than all the impulses before it, except for this one here, maybe. So if you take this impulse that happened in October through November, and you compare it to the impulse that happened in, let's say here, from January, late January to early February. And if you were to compare the size of that impulse, the newer impulse happen. I mean, the newer impulse happened a little bit more quickly. I think we're looking at some FOMO, but if you actually, they're similar in time frame. But if you look at the price range, this most recent impulse is about this big, and the impulse back then is even smaller. So you're looking at a very strong impulse right now. You're looking at a very FOMO-ish look. The impulse that just happened is quite a bit stronger than the one that happened. That was a pretty darn big impulse that happened last year. So we're only seeing the energy go up. And if we compare the current impulse to this impulse right here, I mean, look, actually, let's Elliott wave this. I don't know if this is going to actually work for Elliott wave, but we are going to apply that and see if we can justify that kind of calculation. Okay, so yeah, so far so well. Yeah, this works. You know, this could, I mean, the ABC correction probably have to happen on a lower time frame. I'd have to math that out on a lower time frame, but this might be Elliott wave-ish. Assuming that there is an ABC correction on lower time frame here, then we're looking at possibly a new Elliott wave that's starting. Now, this would be really remarkable because the wave 3, this is wave 1 I'm drawing right now. Wave 3 is usually bigger. Let's not do ABC. Let's do 1 through 5. Wave 1 is usually quite a bit bigger than wave 3 is bigger than wave 1. So wave 1, like wave 3, would either take us to all-time high or maybe above it. Because wave 1 is this big, and wave 3 is almost, I mean, I think by definition has to be bigger. And wave 1, if it was repeated, would take us to 65,000. So wave 3 would take us anywhere between 65 to all-time high. So interesting concept right there. Interesting concept right there. Elliott wave making the new all-time high really possible. And if we were looking at this kind of time frame realistically, this impulse took about 1, 2, 3, 4, like a month, this impulse up. So if this impulse happened in the same time frame, we're looking at all-time high in March. And that's assuming that there's no rejection or anything like that, right? That's assuming that Elliott wave plays out. But that's that. I mean, shoot, man, that's realistic. That is. And if you look at this as even a possible higher time frame Elliott wave, this could be your wave 1, 2, and wave 3, right? I'd have to bust out my fibs to actually calculate where this wave 3 could take us. But we have 2 different time frame wave 3s that look like they're going to take us to all-time high within March or April, which the halving is in April. So all-time high before halving, this might be, I mean, there's been a lot of talk around that in, you know, in the space, right? A lot of talk about all-time high in the space. So a lot of things can happen. Price could come up and reject at all-time high. Price could reject before all-time high. Price could bust right through all-time high. So really, I'm only interested in playing it level by level. And right now, I'd say if you look at some older range data going way back, I'd be looking at something like this. Right. I would look for price to start to consolidate anywhere between 57,800 and maybe 69,000. I'd look for it to consolidate here. And the big clue that price is going to break above all-time high before the halving, that clue would be in how it consolidates. So let me grab my path here. And it could do this in any number of ways, but I would expect it to kind of be around here, maybe have a pullback, range, and breakout. And that is way too long of a time frame for this. Like if we're talking about before the halving is supposed to be right here. somewhere in April. I think like we'll just say mid-April. I'll have to look it up to see when the block is supposed to happen. But I mean, we're looking at a scenario where, let me zoom in on this. Talking about a scenario where price could, whether this is a wave 3, wave 2, whatever it is, price could come up here, consolidate up here for the rest of March, and even break all-time high before that to complete its wave 3. And the wave 3 may be complete before this. Of course, we just talked about that. So the wave 3 might be here. So there might be a pullback to as low as 53,000 before it actually breaks that all-time high too. So that there's your non-all-time high breaking scenario, or at least like your pullback scenario that leads to the all-time high. So if we're looking at Elliott wave, then this is something I'm looking at right here. If we're looking Elliott wave. So, but right now I do expect price to, like I said, come up to the low to mid 60,000s, maybe like 63,000. And whatever happens around between 62 and 64,000 is going to be very, very, very telling. I can tell you right now, though, the algos are nothing but bullish, and they have been nothing but bullish. So that's awesome. Perfect. Okay, so let's see here. Let's roll over to Ethereum, see how it's reacting. There's been a lot of people who think Ethereum, yeah, look at that. Ethereum is making it up to my target. Look, I have been predicting this price action for weeks. So if you go over to even the live shows, or if you go to, you can see the trade right here. I mean, I added this trade. What is this? On Sunday, the 25th of February. So let me zoom in. And imagine it was on a Monday, not a Sunday. I think my box here just got screwed up because I don't really do shows on Sunday. So I'm assuming it was on Monday. But I did this trade live for everybody to see. This right here is, I did this for everybody. Anybody watching saw me create this trade right here. So there you have it. You know what I mean? That right there is free to the public. Now, it's not investment advice. You have to make your own decisions when it comes to investment and trading. But I did map this out in front of everybody. I made this case numerous times before it even got up to this area. And I had targets. I think the original target was based on a Fibonacci. These are both Fibonacci extension targets, and then modified for structure. So the first target would have been around here. Let's see, for this extension. Well, shoot, I don't want to reconstruct it wrong, but whatever it is, these are all fib extension targets. And then 3586 is a structural look. And then, of course, you had your Fibonacci extension a little bit around here. So I wanted to take profit based on older structures. So if you go way back in time, let's see here. There will be, okay, we need to zoom out. Oh, this is on a 3 hour. All right, hold on. Let me get out to the daily for this. Even the weekly is probably better. I chose this 3400 based on structure. So let's show you how I did that. Excuse the crazy screen that you're about to see. We'll go to the weekly. So you can see here, I like 3400 as a round number. And there is a bit of price action right here. Like 3586 actually is more important. But because the Fibonacci extension was below that at 3480, and because 3400 is a nice round number and I front run my fibs, then that's like one way to go. The other way to go would be to put it right, either front run that fib just barely, and 3500 is kind of the round number, and then, the structure is at 3580. But either way, you're looking at a trade that was successful and that I did right in front of everybody to see. Cool cat, good morning, sir. So that's beautiful, man. That's just gorgeous. I love it when that happens. Right, for everybody, we're going to take a look at Solana. I haven't had any other requests just yet, and we're getting towards the end of the show here. But here it is. There it is right there. Beautiful. Okay, Solana. I also constructed a Solana trade for everybody to see. Yeah, March, I was just talking about that. 3,400 to 3,500, just below those. So here's my Solana trade. And like I was saying before, once Bitcoin popped up, then I figured, okay, Solana is going to move up. It does seem that Solana, having had such a hard, crazy move, is basically, it's consolidating, right? So it's within a range right now. I did construct this trade though, because I do believe it will pop up because Bitcoin is popping up so hard. So 3 or 4 days ago when Bitcoin broke out, when it broke out above its high, I'm like, okay, everything is probably just going to keep going up. And Solana being Solana is probably going to go up from here. It's probably going to break out to the upside. And so I constructed this trade and it is well in a profit. Now there is this range in which it was trading. And that range is something of which we must be aware. So, but I do believe it will break out of this and head up. But of course, I will have my eyes on this structure that was created right here at this pivot point, and of course, the top of a range here. And if price does not break above this with any kind of conviction, then I may at least move my stops to entry, and or possibly take profit and wait for it to break above. So, because a great way to trade this, really the best way in my opinion, and again, this is my own opinion, you have to do your own research, but the best way to trade this, the safest way is to look for a breakout, possibly a retest, and then go ahead and grab that long right there, right? That, because right now it's so close to the top of this range. Entering down here gave some decent risk to reward, right? You got a little bit more money to make, and it's like not a, you have kind of that safety being able to raise your stop and click out before the end of the range. It's not the best RRR, but again, I didn't construct this trade with that particular RRR in mind. But that said, if price does break above with conviction, it may not pull back, but it should pull back even on a lower time frame. You might not see it on this daily time frame, but the pullback generally happens. And if it did, then of course, the trade I might like for a safer version of this is going to start above that. Once that breakout has happened with conviction, probably have some a structure-based or ATR-based stop, and then we're looking at a move up to that same 144 with a 3-to-1 trade. So that's just another possible Solana trade that I might see happen. But the current trade is in play, and if I am concerned about it, I can always simply just get rid of it. Yep. Exit out, take the profit, bada boom. Bada boom, bada bing, bada boom. All right, so good to go. Let's go ahead. Let me just take a quick look. Okay, I'm also looking at a Forex trade that I'm in, a nice long I took on the euro. I jumped into it pretty quickly, not really a lot of time to share with my group. I don't share all my trades. I share a lot of my trades with the group, but this one I did not, and it's a beautiful trade with time yet left to enter. You know what? I'm just going to wait to share that with the group. So I'm going to tell the private group that is watching right now, I'm going to share a euro trade, EURUSD, and it's a disgusting risk to reward. It's beautiful, disgustingly beautiful. It's sick. It's so awesome. It's terrible. So, and when I have those kind of like 10-to-1 risk to reward trades, I tend to put smaller amounts in them because it's almost a rule where the higher the risk to reward, the lower the probability of the win. But my sweet spot tends to be around 3-to-1. My 3-to-1 trades, which is great. I remember, really having a hard time even approaching like a risk to reward that was better than 1.2, 1.6. But when you spend as much time bleeding your eyes out on the screen and creating algos as I do, that's the goal. You're going to want to look at that. You're going to want to expand that risk to reward, right? I mean, this way, like with a 3-to-1, I'm risking, let's just make up a number, $1,000, we'll say, to make 3,000, right? Might be 100 to make 300, whatever. What I do is with a higher time frame trade, which I don't generally take quite as often, but you can see I'm taking them. This being one of them, I'll do a higher risk because there's just so much more room to move, and the spread doesn't matter as much and such things. So, all right, cool. We are at the end of the live lab. We have time for one chart request. So if you are watching, whether you are an Algo Factory member or not, I will be happy to do a chart. And if you don't choose one in the next 20 seconds, I will choose one for you. And then to whistle what do you call it? My Jeopardy theme. Just kidding. I just kidding. Ajax says, "Cool cat." Yeah, Ajax, man. You know, I like that one. Like the white hat AI coin. And because it's cool cat, we will look on MexC. Yeah, Ajax is bombing. Okay. Kind of an Elliott wave day for me right now. I'm feeling Elliott waves. We'll start with that. Wave 1, 2, 3. So if my estimation here is correct, we're starting wave 5, right? We'll do a quick Elliott wave look as far as how fibs are done on these. Okay, so let's do that. I learned this happened like a while ago. Mick, we'll look at USD JPY in the private. So I'm pretty sure, Mick, I think I know who you are in our group. Mick, are you in our private group? Speak up if you are. Let me know. Let me ask in here. If not, I might move over to USD JPY. You can always do Ajax in private. Okay, yeah, Mick, we'll do USD JPY then in the private. So let's take a look because I will be doing USD JPY. That sucker has been ripping me off. But let me open this image in a new tab. So I don't memorize these. I don't use Elliott wave that often, but sometimes I go to it because it's such a great reference point, right? So like for example, wave 3 is going to be the 1.618 of wave 1, right? So if we look at this, is that the case? Well, let's use our fib extension, right? So wave 1 to wave 3. Wave 3 is past the 1.618 of wave 1. So if we actually were to, this may or may not actually work for Elliott wave. The trick is that this impulse does pull down. I mean, it does actually pull down at the 1.618. So if we are going to use fibs, then we are looking at wave 5 already, and this is the ABC correction. But let's see if the wave 5 obeys the rules in this scenario that I just drew, right? Let's look at that. So wave 5 is going to be 100% of wave 1 or 1.618 of wave 4. So 1.618 of wave 4. I'd have to do a fib inversion, I think, for this. Yeah, 1.618 of wave 4. Look at that. So wave 4, if I were to actually, let's see. Let me do it the other way around. 1.618 of wave 4. Look at that. So this is our Elliott wave. So we're actually looking at the end of an ABC correction and quite possibly the beginning of the next Elliott wave, if we're going to go Elliott wave on this, right? So ABC correction. Have to check the fibs to make sure this is legit because that looks like a truncated wave C on a correction. But with crypto doing what it's doing, a truncated wave C would make sense. Let's see what the rules are on wave C. I got to move over here. Okay, wave C being 100% of wave A. That's legit. So A, B, C. So 50 or 618 of wave A. Yeah, so far so good. Wave A. 618 of wave A is wave B. Pretty close to that. And let's check out wave A to wave C. Wave A is going to be, wave C is pretty much 100% of wave A. Almost. I mean, it's right there. Not quite 100% though, but I don't know that it has to be C. Okay, yeah. I mean, this is pretty Elliott wave-ish. It looks like Ajax is beginning its next move up. The only trick is I like to see when you have such a massive move up, I do like to see liquidity grabbed. But if we were to look at this as one massive move up on a Fibonacci, it's a 382 retracement. I mean, if crypto's fumbling, then I mean, everybody in Algo Factory knows what I'm thinking right now. We got a 382 retracement right now. So if that's the case on Ajax, I'll be looking at targets at, well, for fib extensions, 119 and just under $1. I would front run the dollar. So I'll be like 99.5 cents or something. But let me roll back to some older price action to see where we might find some resistance from the prior bull run. Okay, so Ajax targets are way up here. Yeah, this is on we'll have to leave MexC really quick. Looks like we're going to go a little over on the public show. So let's go to Ajax USDT over on Binance. Pretty sure it's going to have a lot more history. No, okay, so I guess unless I'm mistaken, Ajax is now at all-time highs, and unless it just got listed later on Binance. Let's look on an older exchange, like say, Poloniex. Okay, well, yeah, so that's it. All we can really look at are the fib extensions. So what was that, $1.119? Let's look over on MexC again. So yeah, all we can do now that we're in price discovery is targets at 119, targets at 99 cents. And I think that this is a beautiful trade. Like ideally, what may happen here, generally speaking, but maybe not in this scenario because we're in the crypto bull right now and just everything is so incredibly bullish. Generally speaking, see, here's the thing, it's too late. Okay, so price hit the 382, and after it hit the 382 right here where that arrow is, it actually has already grabbed that 382. So that really would have been time to do a 382 grab. However, it's not too late to get some good R on this trade. So if I were to trade Ajax right now, and I may very well, I might take a nice bit of a higher time frame long on Ajax. And this is some beautiful risk to reward, even on the current, even in the current scenario. This is a beautiful Ajax trade right now. So thanks to Cool Cat for finding that. My stop loss, I'd have to probably look at ATRs and stuff. So I'm not, listing it necessarily, but decent stop like right here. You could even be tighter depending on how you do your algos. That's a 2.5 to 1 right now. If you like this double bottom and you think it's going to protect you, you could have a tighter stop below that double bottom right there. And I think that is very possible, like for a 4 to 1 trade. The other way about this is that because this is a FOMO kind of scenario, what you could do is look for a pullback in lower time frame. Excuse me, or even on this time frame. And if you get a pullback on this time frame, the targets remain the same, but you might be able to give yourself, kind of a better entry, whether it's here or even a little bit lower. And then that pullback structure may give you a tighter stop. So, what I tend to do in these scenarios is I'll take a position now based on this like 4 to 1 trade. Probably I'll have to measure my stop a little bit. It's not exactly where I would have it, but I would take that. And then I would look for a pullback at a smaller sized trade so I can augment with like a much tighter stop and better risk to reward. I did that beautifully with a Forex trade pretty recently. I was able to actually grab this like kind of just a 2 to 1, something pretty basic. And then as the trade went up, I grabbed a pullback with a super tight stop on like a 6 or 7 to 1. I did half the size of a regular trade, but I was able to make a ton of money on it. So that tends to be how I do things. So this is my Ajax play, and everybody has seen this. Like I just gave this away live. This is some serious badassery to be giving away live. So, don't say I never did nothing for you. Gorilla, how are you doing, sir?
Good morning to all of you. I have a little juicy bit of information that I will be sharing in the private lab. Are we in the private lab yet?
Not yet. No. Are we doing drips today then?
No, there's no drip. There's no drip, lad. There's no drip. But
okay,
there is
some
key intel.
Key intel. All right, good. Well, we got private lab. I'm gonna call it a pre-drip because we're basically it feels kind of drippy. That sounds drippy. You have intel that you're only sharing in the private lab. That sounds kind of drippy to me. Yeah. Sounds trippy. Hey man, you got here. I went over because we had this beautiful trade, possible trade. I need to actually review my algos and make sure
Hey,
I'm good with this.
Cowboy, I shall return. I have to. It seems that it's a windy day, and my trash cans are being blown down the street.
Oh,
I've
geez.
just been alerted by a neighbor.
Give us a send off and then I'll just
Sure. Listen, guys, don't sit on the outside wondering if this is for you. You try vanilla ice cream. You try Rocky Road. You do Algo Factory. Join the app.
Join us or die.
Yes.
you
I like that. That was a good edit, man.
you muted yourself.
Oh, I said I like that. That was a good edit.
Oh yeah, join us. Oh,
Join us or die.
What movie is that?
I had to do it again. That's Robin Hood, man. Robin Hood,
Oh.
Prince of Thieves, dude. That's Alan Rickman, the late and great Alan Rickman.
Gotcha. Well,
Very
join us or
beginning of
die,
the
you crazies. All right. Join the most exciting, dynamic group of trading and algo artists in the entire world right here, algofactory.tech. With that being said, Cowboy, take us private, buddy. All right, man. I'll be right back.
Okay.